All right, we've got some stocks to cover. It's been already an absolute fire October. We started the month off with some uncertainty. The market hesitated for a moment, and then we got the government shutdown, and the market said, let's just buy this thing up and push it higher. And we've been making a lot of all-time highs. Now, I'm trying to identify still my best pick for the month of October. For going into the tail end of September, we ran Tesla up very strong, $40. But then I said, let's take profit on it. We finally got this ugly candle, and now we know it's time to get out for the time being. I wouldn't underestimate Tesla for the entire month of October, but it's taken a little bit of a breather. It's holding its ground. I'm still trying to identify that perfect pick for the month of October, and I'm going to share with you a bunch of stocks that I like, and then I'm going to give you the one that I have today officially settled upon. Now, when you pick an underdog, and yes, this is going to be a big tech underdog pick for today, what makes it an underdog is that it's been trending lower, it's been trending down, and it's not been confirming bullish. And so we want to be careful that we don't fight the trend. Now, the immediate local trend appears to have based out and is building a series of higher lows and is getting ready to potentially break out. And now I like this chart, but I want to be sober-minded. I'm going to go into the chart with you guys. I'm going to show you the things that I like. And as always, we're going to identify a potential stop loss zone. So I'm going to give you a bunch of stocks. Now, every stock I talk about today, I actually like. I'm just going to give you my first top pick for the month of October today. And we've got to talk about the small caps. We cover the big caps, we cover the small caps, and almost every month I've had a small cap stock that has gone up over 100%. Now, in the last video I did on Friday, I highlighted SERV, S-E-R-V, and I said, now is the time. The chart looks beautiful. It's done everything predicted, everything expected from the standpoint of candle theory and chart analysis. It's broken out of a descending line of resistance. It's back tested that structure and support. And I said, now I'm going to raise my stop loss, and it's do or die time. This thing needs to take off Monday. Well, what did we get for SERV? Well, we got a ripping green candle higher. I sure hope that you followed and tracked and participated, because I've never wavered on SERV. We've had some runs where we took some profit and locked in some gain. And I said, guys, on the pullback, we're going to load back up. But then I came right back out and told you guys, back in it, it's going to go where I am predicting it's going to go. And as the saying goes on this channel, as predicted, as seen. So SERV has hit $15. Let me take a quick minute. Of course, this is an ambitious video. I want to cover a ton of stocks. I love the charts. I love all these charts I'm going to share with you, but I've got to narrow it down so I can keep my video concise. I'm going to start off by just taking a quick peek at the SERV stock so that there's clarity as to what I'm expecting there, because I don't think the move is over on SERV. But if you're watching and you're considering an investment in SERV for the first time, you could be tardy to the party, which isn't a problem in a momentum play. It's only a problem if you take a position and don't put a stop loss in, because then you're not trading with discipline. We have a plan. We exercised patience and we exercise discipline. One of the disciplines is to control position size and to use a stop loss. Let's take a quick peek at the SERV stock and let's have a little bit of a celebratory moment. I said on Friday's video, time to raise the stop up to 1190. It's do or die. This thing needs to stay above the 9 EMA, which is your yellow moving average line there that's hovering above the 20 EMA. And it did. And it rocketed us all the way up here today. A beautiful 14% gain from Friday's video, all the way up to our expected target zone. Now, let's take a step back. Let's move from one-day candles to weekly candles. Now, to be clear, you see a target of $17.50 on your chart, and this thing has been on the chart from the very first day that I called this stock out, which was actually back here, and then again, I called it out as a very strong buy on the day that we bounced on the bottom of this channel. I predicted that at some point in the near future, we would be up at $17.50, and as recently as Friday, right here, I said it's go time to Monday morning. We need to rocket up to 15. Well, we did it. Okay. So from a big picture view, we're clearly going back to test the local high, right? And so 1750 is going to be our main target. I'm going to hold this until we get to that 1750, and that's the soonest I'm going to consider selling any of this, right? Some of these small caps are going to run away on us one day. Now, I don't think it's going to be in 2025. I think that the minute these small caps get up into these lofty price zones, then the management's going to come out and dilute the shares, because you got to remember, they don't make money. They just consume money trying to bring a valuable product to the marketplace in the hope that one day they'll be a market leader. One day they'll have a giant moat around them, and they'll be a significant big tech robotics company that you're going to see one of their robots on every single corner of America, delivering food and doing everything else under the sun. That's the dream. That's the vision. But until that happens, until the big bucks begin to roll in, and until companies begin to buy tens of thousands of their robots and enter into big contracts, it's all speculation. And to keep the lights on, they've got to dilute the shares, which means they've got to create new shares, just like the government does when they print new dollars. They create new shares and they go out and they sell them on the side, causing the shares that you own to go down in value. So I'm just preparing you as this stock is ripping in a macro bullish environment. Be prepared for why there's going to be the need to take profit and why it's not just going to run up to $100. So I'm not telling you to lock in the gains today. I'm holding. It just hit my $15 again, as predicted, as seen. My final target, the price that I'll have to make the tough decision, that's going to be the $17.50. And we'll see if we get there very, very soon. There is no guarantee. This is just my plan. And with my plan, I've got stop losses, and I'm prepared to lose money on my plan. I'm going to have to patiently let it play out. I'm sharing it with you guys. Welcome to Wall Street. This is the Stocks with Josh show. I appreciate you joining me today. Thank you for dropping a heart, saying hi, hit the like for me, hit the subscribe, hit the all notification bell so you make sure you don't miss these videos. Now, today I'm going to outline some of my favorite picks for October, and I'm going to give you my favorite pick and why. I'm going to try to get through it quickly. I don't want you to sleep on the Stocks with Josh Discord, because that's where you can learn to chart alongside me and my crown traders. You can get my A+ scalp trade setups that I give half an hour before the market opens 5 days a week. Those are the basis for day trading the first couple hours of the market, as well as my option plays. And we swing some small cap stocks there every day. You can live trade along someone 5 days a week. Go to the website, which is the same name as the show, www.stockswithjosh.com. All right, let's get into the lineup of hot stocks. Now, some of these are ones that I'm buying leaps on. And what a leap is an option that expires at a strike price 12 months out. Now, I just want to highlight that we bought some leaps months back for INTC, and we bought those leaps initially at $4. And then INTC popped and we made some money. Then they pulled back, and eventually those leaps were available for under $2. Well, if you continue to accumulate because of a positive outlook on INTC, those options, those leaps today are sitting at $17 plus, each of them over a $1,500 profit. So each of these stocks I talked to you about today, I think each and every one of these is potentially leap worthy. You got to do your own due diligence. Let's look at the lineup. Now I'm going to recap BMY stock, Bristol Myers Squibb. I still like this as a beat down healthcare that seems to be turning the corner and will begin to move with some of the other early healthcare movers like Eli Lilly and UNH. I think there's more upside for them, and I believe that BMY is going to catch up. So I do like it as a long leap play. And then Google. Now remember, I'm going to give you a handful of these. One of them is going to be my October pick. Google was my best stock to invest in alongside BABA for the month of September. It's still in play because we've had a bullish run up. We've had a beautiful little consolidation, and now we're moving back up. I wanted to talk about Google on Friday. Didn't get a chance to go into it very much, but Google is breaking out today, and I think it's going to go right back to the top. So Google is in play, folks. Google is a stock to own in October. Then we've got PayPal. Now, this thing has been wildly undervalued because the space has been deemed very competitive, and it doesn't potentially have a moat. And what I do see, though, in the stock is that they've been performing very well, and they've been underrated. They've become an underdog on Wall Street, and I think that they're basing from a chart perspective, and you may not want to sleep on PayPal. And then a crypto has made the list, and that's Ethereum. When we go into the Ethereum chart, it had a 3 top resistance line that it eventually that it came off of and fell into despair, and eventually we broke out, pushed above it. We've come back and back tested it and bounced. So Ethereum looks extremely well positioned for the month of October, and I think it can go back and test its recent high. That's my prediction for Ethereum. And then Meta. Now, Meta, you got to watch it very carefully. When you look at that chart, fact is there's nothing wrong with it. It's been an extremely strong mover, and it's simply had a mild cool down or cool off. And if we're going to continue to see this positive animal spirits on Wall Street, it means that folks are going to come right back to Meta as a potential winner. We are weeks away from Meta's earnings, and if they have another blowout moment, this stock is going to go up and past its recent all-time high, and you're going to be kicking yourself for ignoring it on the pullback. Then we've got LYFT. Now, LYFT is one that I talked about a couple weeks ago, and it's been holding ground, but it's doing well. And I really like LYFT, Uber, and Tesla overall because I think these companies are going to be huge in 2026 with all the opportunity and tech growth. They're well positioned. Now, LYFT has been struggling to carve out their niche in the space, but they're still a significant player, and I think that the stock is getting ready to go on a long-term breakout move. I like LYFT for the month of October. And then Amazon. Now, Amazon and Apple really lagged the rest of big tech for most of 2025. And then we saw what happened with Apple, which is something that I called out. I said, Apple's going to break out soon. It's going to break out in Q3. We saw that. It's moved all the way back to all-time highs. Now, we could pull back a little bit on Apple, but Apple's been showing a lot of strength. Amazon has yet to do that, but the charts are not weak as some might suppose. They're positioned for a potential bullish run. And if we did see some weakness in some of the other big tech companies, it wouldn't surprise me if that money rotated right over into Amazon to let them have a strong tail end of 2025 move. Amazon has a doji on a pullback, which means a little bit of indecision, a little bit of hesitation. What is the market hesitating over? Well, it's hesitating about going down anymore. So if we can make up a little bit of ground, Amazon could be a huge runner. And that's all I need to load up more on Amazon Leaps. Let's go check that out. You can see that it's steadily climbing. And here's all that we need. It's actually above 220, and I mentioned before, 222 to 224 is the breakout zone, which we could easily hit tomorrow. And you can see that there's nothing but thin air between 222 and 232. This is where the next level of resistance would occur here at 232, and it's still under the shadow of a recent bearish candle, but I'm confident in it. I like it. I just am going to wait until I get that confirmation of the price above 224 to signal that it's a green light for me, that I'm going to go in a little heavier. So out of those picks, okay, which one do I like the most for a position right now? Well, it's going to be PayPal. And I'm just going to shoot you straight. Why do I like it? Because this one has spent the longest amount of time basing. It's moved from decline to despair to a long-term consolidation. It's building a series of higher lows, and it looks positioned to have the most explosive move between now and the middle of 2026. Now, that's one thing I like about it. Another thing I like about it is that it has the highest potential for the largest move. This thing could go up 200 or 300%. Now, it's hard to find big tech companies like that. Now, we recently came off of a potential breakout that failed and brought the stock back to its more recent lows. Very similar to INTC. And around the same time, I said, guys, we're going to continue to move sideways till eventually it gets the right news story and it will have based out and we'll rock it up. And that's what happened with Intel. So I think PayPal is positioned for the same thing. And you say, well, Josh, what might the catalyst be? Well, the fact is the catalyst has been that they have been cutting costs. They understand the moment that they're in, that they need to become lean because of high competition, but it's going to be AI. It's going to be tech-driven news, which is going to ultimately cause the bears to let go of their death grip on this company. And I'm beginning to see that movement in the charts. Let me take you guys into that real quick, and I'll give you a few more important things we'll be watching for PayPal. All right, I want you to screenshot these levels because you're probably going to see them repeatedly throughout the month of October and November as I come back and celebrate with you my technical analysis. 66 is the stop loss, which means that if we pull back below 66, I will let this thing go and I'll just have to consider that I saw it wrong. The immediate target is $80, but I actually believe that we're going to fire right through this and shoot up to 120. I think ultimately we will back test 100 and consolidate. This will make a beautiful flag that will ultimately come back, test 119. And in the course of time, which would be 2026, I believe that we will see $185 as PayPal reinvents themselves with AI and future partnerships, which will slowly be unveiled. And I want to make a point about stocks and charting and my experience over many, many years. This company got beat down because they lost their momentum, they lost their edge, and the market didn't believe they had a moat anymore. And so it got brought down to its lows. And it caused leadership of this company to begin to seriously assess where are they going. They had to reinvent themselves. The first thing they do is they cut their costs dramatically to begin to demonstrate profits to Wall Street to get them re-enticed to buy the stock. Wall Street didn't care. They said, well, you need to do that, but you also need to prove to us that you have a future so that we can give you that fat multiple or multiplier that would cause the stock to run back up to all-time highs. Now, that's the part that's slowly getting worked out and is going to be revealed. Now, I want to comment on how they're positioned with their forward PE and their trailing PE to their competition. Their trailing PE versus Palantir. Now, I know that you don't compare PayPal to Palantir, but I just want to make a point about this. Their trailing PE is 15. Okay, so they've got a trailing PE of 15, while a company like Palantir has a trailing PE of 600. So that's how much people have confidence in Palantir right now versus the confidence they have in PayPal. They've got low confidence. But let's compare PayPal to its peers, which would be Visa and MasterCard. And you got Amazon and Apple and Google are all doing different payment type systems. And that's why the stock got beaten down, is because of the competition. But let's look at Visa and MasterCard right now. They're being priced out, which I think they're under more threat for competition from tech services. But their forward PE, which is different than the trailing PE, PayPal's is 12, while Visa and MasterCard respectively is 24 and 34. So compared to competition, PayPal is extremely undervalued when they have a tech edge, and they've got more integration and opportunity with AI potentially than Visa and MasterCard. And I know that could be debated, but the bottom line is that it's the charts that lead the way. We don't want to get in front of them. We want to follow them. And right now, that PayPal chart has based, building a series of higher lows, and looks like it wants to go higher. And that's why it's my pick for October, maybe even all the way till the end of the year. I see ultimately that PayPal, once it begins to move, can get all the way to $180. Now, I want to call out, I want those who have been with me for a while to acknowledge in the comments section that we did this with Alibaba. When Alibaba was forgotten about and underrated, underdog, nobody wanted it, nobody liked it. They said the company is dead, down at $82, $85. I called the breakout and I said, this wouldn't last. This thing is absolutely going to rip all the way to the top again. And I feel the same way about PayPal. Now, I will highlight when we get the technical confirmations of that event. For PayPal, it's getting initially above $72 and then above $76. If it can clear those two hurdles, then we're really going to see it move to that 80, that 100, and that 120. Let me know what you guys think. I needed to give you something today, and that's what you got. And SERV should be holding you over. Everybody should be feasting on SERV profits today. Let's see how we do on this pick. We'll analyze it throughout the month. Peace and blessings. Don't sleep on the Stocks with Josh Discord. We give option alerts and swing trade alerts and scalp setups every day. Me and my Crown traders providing a ton of value over there. I appreciate all of you guys. Peace and blessings. Have a wonderful day. Talk to you soon.